let's welcome on board Rohan Gupta to talk to us about what's happening in the entire chemical sector. He's, of course, the director at Nuvama Institutional Equities. Rohan, hi, good to be speaking with you. What's been your read through of the earnings season of Q4 FY24? Because while some of the managements are calling it the bottom, there are others who are talking about how we are perhaps close to the bottom, but at least 6 to 12 months out. What's your own view?
Nisha, hi, good afternoon. The results so far now for most of the specialty chemical players have broadly been in line with our estimates and also with the consensus somewhere, except maybe one or two disappointments have been, but broadly it has been in line. Most of the analysts in the street, we were predicting that current quarter should be better than Q3, and that's what mark a sequential growth for most of the specialty chemical players. However, the management commentaries for so far now have been quite okay and encouraging in terms of the chemical prices bottoming out. Some of the companies have been talking about that the recovery in agrochemical sector can still be slightly languishing because there is still inventories in the market. So as far as the agrochemicals is concerned, there may be 1 or 2 quarters delays. But as far as the discretionary consumption-led sectors are there, like dyes, paints, pigments, textiles, autos, aerospace, and all, we are seeing that the sequential recovery is in place. One concern is also that how China will play out going forward, because so far now that Q4 have seen a sequential recovery, but will it continue in Q1? I think that's what is also creating doubts in the mind of the investor. We are quite confident that though the sequential recovery is in place, chemical prices in broadly have bottomed out and are likely to remain stable from here level or can even go up a little bit, except maybe agrochemicals, which may see 1 or 2 quarters more delays, but broadly specialty chemicals should continue to post sequential growth and the momentum should continue. That's our.
Let me now break it down a bit. You talked about the China factor, and that's something that, of course, the part of the street is worried about because, A, on one hand, you have US threatening to put additional tariffs that might mean additional dumping coming into India as well. But there's the expectation that there could be some anti-dumping duties post-elections. Which companies do you think stand the best place to weather this kind of volatility and uncertainty?
So, Anisha, definitely we are living in an uncertain world, and whatever the points which you mentioned that US further raising the duties on many EVs and on China, I don't know how it will really pan out because I mean with the rising duty, will it have a production cut or the exports from China to US will come down? Really, we still don't know about it because at a 25% and even 100%, I think that the US dependency on China still will remain there. On the contrary, you were talking about that whether they will start dumping to Indian markets, and I'm not sure about it as of now because these are the moving parts. It's definitely not in control. Definitely, I think that in India we may see some more anti-dumping duties may come on some of the Chinese material, or some of the segment may see further. Some of the commodity chemicals probably may see more anti-dumping being imposed in India on Chinese imports. I think that is the segment which have been seeing some additional duties coming in last 2 to 3 years and may continue to do so. It will be very product specific, but I think that scenario may continue.
Better, Rohan, the companies that have more exposure in terms of domestic, because it's expected to be above normal, monsoon, and the companies which are more dependent on, let's say, discretionary and specialty chemicals, or do you think the ones which are exporting? Could you break it down for us in terms of which segments do you think will perform better and which are a bit more, not so well placed per se?
Yeah, sure. So companies which are completely dependent on agrochemicals globally, they may still see some weakness, like maybe players like UPL or even Anupam Rasayan and all, which are the purely player on agrochemicals. They may see some late recovery. Players who are not so dependent on agrochemicals, I believe that no consumption led like Galaxy Surfactant, which is a pure domestic as well as the exports opportunity player. I think that with the recovery in Indian agri-led recovery in FMCG industry, also global environment improvement in the US and also in Egypt and Turkey. So I think that these are the markets which should drive the growth in the consumption-led sector which should be beneficial for player like Galaxy Surfactant. We are positive on that name. Stock have been languishing at the current level from quite long time. I believe that If the margins come back and the revenue growth comes back, then there is an opportunity. Similarly, we are quite positive on a specialty chemicals, primarily looking at the EV battery space. There, Gujarat Fluoro, which is working a lot on that space. I think that name should be washed out. We remain positive on that. Even players like Aarti Industries, where we are positive, given that they are not completely dependent on agrochemicals. Once again, they are diversified players catering to multiple end user industries, including textile, dyes, paints, etc., and also have invested significantly in capex. So I think that even the management commentary has been quite positive, and this stock, I think that should continue to post recovery even in this year itself.
I think broadly those were the discussion points we wanted to talk about. Thanks so much for making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.